If you're a beginner trader, this video is for you. Now, in this lesson, we're going to be talking about what is trading really, why most beginners start wrong, trading for beginners, how to start, survive, and think like a trader. This is going to be a 15-minute lecture or more, so just pay attention to it and take down notes. Now, what we'll be covering today is trading gambling. What's the difference? How the Forex market actually works, who is in the market, the big players, how much money moves through Forex every single day, why 90% of beginners lose money, okay, the mindset that changes everything. And at the end of this video, I promise you are going to have a renewed mind, a different mindset towards trading, and you understand what consistency in trading really looks like. And I have over 5 years of experience trading the market, so I'm in the best position to be telling you this. All right, let's begin. Now, is trading just gambling? Okay, let's settle this once and for all. All right. Now, what makes a specific thing gambling, or what is gambling? Now, gambling has these factors. If anything has these factors, then it is gambling. Okay, random outcomes. House always wins long term. Who is the house? The person that provides you the feed to gamble on. Okay, no edge, no system. So you don't need an edge nor system to actually gamble. Pure chance and emotions rule. So when you feel lucky, you just go and place a bet. Simple. Now, fixed odds against you. All right. You can do your research on casinos and how they work, and basically you understand that in the long run, the house always wins. All right, now what differentiates trading from gambling? Now, trading is probabilistic, not random. These are two different terms. Random and probability do not meet. You understand? Random and probability do not meet. All right, there is random outcomes even in the range of probability. Okay, if you're going to look at, obviously you don't know which trade you're going to take that is going to be a win. All right, but you can actually grade your setups: high probability, low probability, medium. You understand? That's what separates trading from gambling. Okay, now edge-based decisions. All right, your decisions are based on your edge. All right, your edge that you've back-tested, forward-tested. You've noticed that this pattern actually occurs in the market at a specific time, and that allows you to have an edge, a probability of winning in the market. All right, and it gives the advantage to actually win. Your broker or the price feed, the people that those that provide the price feed to you to trade, okay, they don't do it so you, obviously they are there to make profits, but still, okay, it's not like they win all the time, you understand, and you lose. All right, they make money off of spreads and commissions and all the sorts, but still there's opportunity for you as a trader. Okay, now let's move on. Risk is calculated and controlled. All right, what I love about trading is that you can decide to risk 1%, you can decide to risk 2%, you can decide to risk 3%. All right, risk is calculated and controlled by you, the trader. Okay, you might be someone that just got off retirement. You might be someone that is young. Okay, you might be a young individual. You might be a single mother with children. All right, trying to know if Forex is the right path for you. Maybe you have some money saved down and all of that. Now, what separates Forex from gambling? Forex trading, or any form of trading, futures, what have we, is the fact that you can actually calculate your risk down to the dime. You can calculate your risk down to the dime, what you want to take per trade. You can actually also calculate what your return will be at the end of the day. Alright, so let's get back to it. Discipline replaces emotion. To be a disciplined trader, it takes practice and a lot of effort. So yeah, it's not just based on emotion. You're not trading just based on emotion. You're trading based off of discipline, showing up and executing the same pattern every single time. Okay, now you set your own odds. There's no fixed odds against you. You set your own odds. How do you set your odds? You set your odds by consistent execution, following your plan. You set your odds by also having a set of rules for engagement that sets you for profitability in the long term. You set your odds by understanding what consistency is. Now, people think that consistency is a destination, but I will tell you this from my 5 years of experience. Okay, consistency is not a destination. Consistency is as simple as showing up every single time you see your setup and executing, no matter what happens. All right, you go home, you come back the next day, all right, execute and follow a risk management model. Once you have that, you are good to go. Now, how does the Forex market actually work? Okay, Forex simply means foreign exchange. You don't have to complicate it. This is just a very simple breakdown. You are simply buying one currency and selling another at the same time. Okay, now the Forex market, these are quick facts about the Forex market. The Forex market is open 24 hours, 5 days a week, so 24/5. Markets never sleep. London, New York, Tokyo, Sydney overlap around the clock. All right, but I personally prefer to be trading between London and New York. All right, because these are active times for the market. All right, if you just look at a sample size of 30 days, check the time where consolidations happen, you will notice that it's usually the Tokyo or Sydney session. All right, check the time where we have large market protractions, price moving in one direction, usually London or New York. You understand? So keep that in mind. Now, no central exchange. There's no central exchange. Forex trades over the counter, that's OTC. OTC. No single building or exchange. There's no single building or exchange. It's a global network of banks and brokers. Simple. All right. Now, 3, pairs, not assets, not single assets. All right. You always trade two currencies together. Now, for instance, you must have heard of Euro USD, Euro JPY. You must have heard of GBP USD, GBP JPY, and you're wondering XAU USD as well. All right. Now, what does this actually mean? It simply means how many US dollars does it take to buy 1 euro? As simple as that. So Euro USD simply means how many US dollars does it take to buy 1 euro? Simple. So when you look at it this way, it's pretty simple. All right. Let's move on. Now, who actually is in the Forex market? Okay, if you've wondered about this, you're not alone. All right, now you're not trading alone. Here's who's on the other side. You have central banks. They control interest rates and money supply. They're the biggest movers. When the US Fed speaks, the markets shake. Okay, now if you're wondering what the Fed is, that's the Fed chairman. Currently it's Kevin Walsh. Okay, so when we have the Fed interest rates decisions news, you see the market, large protractions in the marketplace. Okay, so commercial banks are also involved in the market. We have JP Morgan, Goldman Sachs, Barclays. They trade for clients and themselves. Massive daily volume. Okay, we also have hedge funds, so sophisticated investors with billions of dollars. They trade using complex strategies and algorithms. Now, retail traders, okay, that's you and me. Individuals like us trading through a broker, we are the smallest, but we can still profit. Okay, last I checked, we make up like 5% of the market trading volume daily. That is still a lot, but it's okay. 5% of the market trading volume in the market is made up by retail traders. Now, we also have corporations, so multinationals converting currencies to pay employees, suppliers, or repatriate profits globally. Now, brokers, the middlemen, they give retail traders access to the market. Choose regulated ones carefully. Okay, so if you're looking for a regulated broker, I have a link in the description. You can sign up, and when you sign up with the link in the description, you can simply let me know that you signed up with my broker, and I'll have a gift for you. I'll give you 2 months access to my signals channel. So if you are looking for trading signals that are profitable and reliable, okay, on time, that you can follow on a schedule if you have work events, or you have to be at work rather, okay, and you just want to just get an alert, get in and get out, okay, I'll do that for you. So check the description below, and I'll have it right there. Now, the size of the Forex market. The Forex market we have 7.5 trillion daily volume. Okay, so $7.5 trillion is traded every single day. Okay, we have $25 billion in New York Stock Exchange daily volume, and it's 300 times bigger than stock markets combined. Can you imagine? And it is the most liquid market on earth. All right, what does this mean? The ability for you to find a buyer and a seller at any given time. So meaning that if you go to the Forex market right now and you are selling a currency, you will find a buyer instantly. Okay, if you are buying a currency, you will find the seller instantly. So there's no hold up on funds. You make profits instantly, you lose instantly as well. You understand? It's not, and obviously in the long term, it's net profits that we look at. So consistent gains doesn't mean that there won't be consistent losses as well. So consistent losses with consistent gains. All right, when you match it up and do the maths, you see that you're profitable in the long term. Okay. Now, why do most beginners fail? All right, these are some of the things I wish I knew as a beginner, so I'm here telling you this. Why do beginners fail? Let's be honest. Before we go further, no risk management. Okay, I've seen beginners just look at candles going up and going down, and they're like, oh, I'm going to buy, and no fixed management, just throwing in lot sizes here and there. Okay, 10 lots, as many as they can. You understand? I in the book how to trade for a living, I think something like that is mentioned, where someone lost about 200 million US dollars just gambling, no risk management, just doing whatever they like. So that's to tell you the extent that it can go to. It can actually turn to a gambling habit. So that's why you have to follow the maths. Trading is maths. Trading is maths, and it's not complicated maths. It's simply net profits over the long term and consistent execution, showing up. That's why people go for algorithms, right? Go for bots, because they execute better than human beings. But you can train yourself to always be in the mode to actually execute with proper risk management. Okay, let's go on to the next thing. Chasing fast money. They expect profits in weeks. Trading is a skill that takes months to develop. Okay, so if you are looking for fast money, get a job. If you are looking for fast money, freelance. If you are looking for fast money, basically sell something to someone, but not trading. Trading is slow money, slow paced. All right, like I have someone I look up to that once said this. Okay, his name is Mark Hutchinson. He said, you can't, it's not a get rich quick scheme. Trading is not a get rich quick scheme, but you can get rich fast. Two different things. You can get rich fast as you get more capital. All right, obviously if you are earning about $10,000, or sorry, if you have $10,000 capital, you can't earn as much or make as much profit as someone that has over $100,000 or 100 million. All right, now copying others blindly, following signals or copying trades without understanding why, it's dangerous. All right, that's why in my signal service I show you the chart, I explain to you the reason why we're buying, okay, and then I give you entry, exit signals. Everything is taken care for you. You understand? And I'm not putting you in risk that I won't personally take. If I'm taking a trade, I'm sharing it with you also. All right. Now, emotional decisions, fear and greed override logic. All right. So they move stop losses, they overtrade and revenge trade. All right. Also, no real plan. They enter trades randomly with no clear rules for entry, exit, or risk. All right. So these are the reasons why beginners fail. Now, there's something called the 1990 rule. The most important statistic every beginner must know. So 90% of retail traders lose 90% of their accounts in 90 trading days, basically. So what does this mean? It means that, for instance, let's say you just said about Forex now. There are people like that just go into the market, go and throw away money, basically, without really understanding in depth what trading is about, which is why I am teaching you what I'm teaching you today. With this mindset, okay, it will allow you better to enter into the space with more understanding, okay, and you won't fall into this category. All right, let's move on. Now, the mindset shifts that changes everything. All right, so there's the losing mindset and the winning mindset. The losing mindset is what places you in that statistic 90. All right, now the losing mindset is I want to get rich fast. I'll figure out risk later. Let me copy a signal. I can feel the market moving, and let me copy a signal without understanding what the person is doing. Okay, I'll stop when I'm profitable. Now the winning mindset is I'm here to learn a skill. Risk management comes first. I need to understand every trade I take. The market is neutral. My feelings are noise. The market does not care about your feelings. The market is not out to get you. All right, I'll follow my plan even when I'm profitable. Okay, and let me add an extra. I'll follow my plan even when it loses. Okay, you need to have a plan for when you take a punch in the face. I think it's Muhammad Ali that said that, or Mike Tyson. He said that everybody prepares when you're going out to fight. Everybody prepares to throw punches, but nobody is ready to take a punch. So you must actually plan to take losses. What are you going to do when you take a loss? Okay, what hobbies do you have outside trading that would enable the loss or help pacify you? Basically, take your mind off the markets. You understand? Who is your accountability partner that will help you? Maybe hold your trading tools, okay, while you go and attend to other hobbies and attend to other things, so that you are not over trading. All right, so I just dropped some gems there. Now, bonus things most courses won't tell you. Okay, trading is not a get rich quick scheme. Professional traders often take 1 to 3 years before consistent profit. That's not failure. That's a realistic timeline for any real skill. Okay, your broker may not be your friend. Some brokers profit when you lose. Understanding how brokers make money helps you choose the right one. Okay, so I explained that in lesson 7. All right, now most YouTube gurus are marketers. Flashy cars, watches, and guaranteed signals are red flags. Real traders protect their edge. They don't sell it for $97. All right, real traders protect their edge. They don't sell it for $97, and that's true. That's actually true. Okay, so what I also want you to take from this is that if you're looking for a legitimate broker, okay, I've done the work for you, I've done the research for you. Just check the description, check the link in the description. I'm sure you enjoy your time there. All right, so sign up with the broker, make a deposit, and check them out. Things I wish I knew as a beginner. Okay, losses are tuition fees. Every losing trade is paying for a lesson. The goal is to pay as little as possible. Now you would be wrong a lot and still profit. A trader who wins 40% of trades can still be profitable. It's not about being right, it's about how much you win versus how much you lose. The market doesn't know you exist. That's funny, right? It has no memory of your last trade, no grudge against you, no interest in whether you win or lose. Stop taking it personally. Your first 6 months are school, not business. Expect to learn, not earn. Treat it like starting university. You won't expect to graduate in month 1, okay? Patience is the most profitable skill. Most beginners lose everything over trading. The traders who last are the ones who wait for high quality setups and skip everything else. So I'm going to be dropping a trading course here on YouTube for free. Okay, so you can do well to go through it, and yeah, over time I'm going to drop that. So you can do well to go through it, and I'm sure it's going to make a lot of traders profitable. Most of your pain points, most of your problems, and my experience in the past 5 years is going to be shared in that course. Now, how to think like a trader. Okay, beginner traders are falling in that 1990 rule. I lost today, I'm a bad trader. I need to make back what I lost this week. I made profit today, let me trade more. 3 losses in a row means something is wrong. I'll quit if I'm not profitable this month. Now, how does a profitable trader think? 1 loss is 1 data point. What does it tell me? Okay, that means you're journaling your trades. I follow my rules. I don't chase, I wait. A good day doesn't change my position size. Losing streaks happen to every trader. My edge plays out over 100 plus trades. I measure myself over 3 to 6 months minimum, so over a quarter and biannually. Okay, now how long will it take to learn trading? All right, if you are learning on YouTube or through books alone, 2 to 4 years. Okay, and average cost is low, but risk level is very high. Okay, paid courses, generic online, 1 to 2 years. All right, this is how much you likely spend, $100 to $500, and it is very high. It is high risk rather. Learning with a mentored community, 6 to 18 months. Medium expense will be $200 to $800, and its risk level is medium. Now, one-on-one mentorship from a live trader, it's going to take you about 3 to 12 months. Higher average cost, about $500 to $2,000, but your risk level is very low. So you choose the path you want to take. All right, if you want hand holding, if you want someone to take you through one-on-one mentorship, I'm here. All right, you can sign up for my one-on-one mentorship, which I will drop in the description below as well. What you learned today: trading is not gambling. Forex is the world's largest market. The 90-90 rule: 90% lose, but you know why. Okay, think in net profit, not daily profit. Losses are tuition fees. Mentored learning is the fastest path. All right. Now you're ready for the next step. I'm going to be dropping another lesson soon. Thank you for your time and have a lovely day. Okay, do like, subscribe, and turn on post notifications, and drop a comment. If you have a question from anything I've said so far, just drop a comment. Thank you.